I'm Matt Bichard with REIT.com here in San Diego for REIT World 2012. Joining me for this CEO Spotlight is Jay Flaherty, the Chairman and CEO of HCP. So Jay, recently HCP expanded its portfolio in the senior housing space. What drove that decision to expand in this area, and do you have plans to keep going even further?
Well, senior housing is an important part of our portfolio. It's about a third of our overall portfolio. This particular opportunity was unusually attractive. It was largely private pay, so we like that. The operator is one of our core senior housing operators, Emeritus, that we have an awful lot of confidence in. They had actually taken over the management of this portfolio about 2 years ago, so they had a nice rhythm about where they were with the portfolio. It was all unencumbered real estate, so $1.75 billion of unencumbered real estate, which is unusual. Usually senior housing portfolios have a lot of secured debt on them. So what we were able to do was structure the transaction in the form of a triple net lease with attractive escalators, and we've got an opportunity. There's a lease-up component to that portfolio that we'll have a participation 5 years out in, and we were able to finance it immediately with 40% debt, 60% equity at very attractive financing costs.
And the healthcare sector has benefited from some fantastic fundamentals, but there are also some uncertainty and some concerns, healthcare reform issues, Medicare reimbursement, other regulatory issues. How do you as CEO kind of balance all those kind of question marks?
We expect there to be a lot of operator consolidation, so in the hospital systems and the post-acute systems and the skilled nursing facilities, and we believe that much like what happened in the aerospace defense industry consolidation after the defense budget got cut significantly in the late 1980s, you're going to see a lot of consolidation, and you'll see companies, the best-in-class companies, get larger. They'll have their margins squeezed, but they'll be very viable, much larger companies, and those companies, we believe, will want capital partners to own their real estate. You know, it kind of dovetails nicely with the emergence in the last decade or so of the healthcare REITs as a real significant class. We've got 3 healthcare REITs now that are in the S&P 500. So I think it's a recognized asset class. I think you've got the growing acceptance of PropCo, OpCo structures in healthcare that you've seen in other spaces. So that, coupled with this kind of wave of consolidation activity at the operator level that we expect to see in the next couple of years, with healthcare reform being a catalyst, we think that's going to create some very, very significant transaction volumes, and one of the reasons why we're keeping our balance sheet as strong as it is and trying to be positioned for that opportunity.
HCP was recognized as the healthcare sector's winner for NAREIT's Leader in the Light Award. What's been one of the most important initiatives you've put in place in regards to your sustainability efforts? Sustainability,
in a much broader context, cuts across our entire company. It involves corporate governance, good corporate governance. It involves succession planning with respect to the board and the management team. I could even go so far as to say that if we are really committed to sustainability as a company, which we are, from the board of directors on down to the industry, we all ought to be doing everything we can for the properties that we all own, which are seniors in the country, which are obviously in a very precious part of our U.S. population, for them to have the opportunity to be in properties that they can get the best care at, with the best caregivers, and have the right settings.
Jay, thank you so much for joining us.
Thanks, Matt.
For more on this and other REIT news and analysis, be sure to visit REIT.com.